Money Radio for a really great future. We're talking real money.
For some strange reason, we just keep doing podcasts. We're old, and yet we're here talking to you about, well, one of the most important things you deal with in life, and that's money. Hi, everybody. Welcome to Talking Real Money. You see the name fits with the topic. I'm Don McDonald in Florida. This is what NPR does. There's an NPR show that goes, I'm so-and-so in Washington. I'm so-and-so in Boston. I'm so-and-so in Phoenix. And I go, yeah, that's because you guys all have tie lines connecting yourselves. I'm Don McDonald in Florida, and that's Tom Cock in Bellevue.
Hello.
Does that mean good view? I think that does in some strange
As long as it's not referring to the hospital famously in New York, I'm okay with it. So.
Well, you know, the room you're in is padded.
And frankly,
it is literally padded.
Looked at my recent behavior, probably appropriately so. So, yeah, exactly.
So we're here to talk about how you make money, save money, spend money, invest money, and deal with the financial world around you. And today we're going to focus on how you feel about money and our economy and our situation as it is today. This is based on a study, a recent survey poll done by the Wall Street Journal and NORC, which NORC is just fun to say.
What does that stand for, NORC?
I'm going to
tell
you.
I know NORAD, but I don't know NORC.
It's the naturally occurring retirement community at the University of Chicago, a nonpartisan research organization. It's NORC. If you say the whole name, it's NORC and Mindy from the University of Chicago.
I was waiting for that reference. I was waiting. And by the way, before you even do it, I'm going to make a statement here, because here's what I believe about all these things. If you go take the risk quiz, for example, right now, after the market's basically gone up for the last, 2022 was a bad year, but okay, let's just say 3 years, your risk tolerance is going to be off the charts way better than it was, for example, in 2020 or 2008. So much of this is dependent on the moment for people. But where they are.
Absolutely, absolutely. But this one's got a pretty simple scoring metric.
All right.
There are 4 boxes, basically 4 places you can be in through the answers you give to this poll. One is a comfortable optimist.
Yep.
The other is a comfortable pessimist, a stress optimist, or a stressed pessimist. And basically those refer to the comfortable part or the stressed part is your current situation, and the optimist-pessimist part is what you believe to be the case for the future, the outlook for the future.
And this is for me, personally, not the country, not the world.
No. It's for each individual personally.
Okay. And part 2 of that is this going to be with the electrodes or without? Because my responses could be different.
This is non-electrode. We
right.
Actually, I think we were cited by the FDA for using the electrodes without approval.
Boy, if I could have used them, I'd be using them a lot lately. So that'd be bad.
And this poll had some very interesting results. And I'm going to give the poll to Tom. The questions to Tom.
Yes,
here coming
that's
up.
why I asked about the electricity.
But the results were, I think they were interestingly telling. Don't you?
I agree. Yeah, I think so. But go ahead. Let's do the poll first. Then we could talk about what people felt.
How the rest of the country.
How do you feel, Don?
Yeah. So we have a set of questions, Tom. Yep. Are you ready?
I'm ready.
Are you sure?
Absolutely.
I don't want to stress you out. You're having a rough enough week as it is.
Yeah, that's true.
I know
you
the
said
answer
that last week, by the way.
I did too. Yeah. Well, it's just your life right now.
I know, it is.
All right. So this is current. Are you satisfied with your present financial situation?
Yes.
Satisfied.
Yes.
So they're kind of, I could give you all the choices, but I'm not going to. Which best describes your present financial situation? Comfortable with no major worries, adequate, getting by, stressed, can barely afford, falling behind, don't know.
I'm one of those spoiled people, so I'm going to say comfortable with no major worries.
I was really counting on don't know from you.
Know. Yeah.
All right. Now, about these, tell me if you're confident, not confident, or you don't know. If you just want to go don't know, go ahead. It's
don't
fine.
know. Don't know.
Thinking about your financial situation, how confident are you that you could find a good job if you wanted to? Answer the question.
No, the answer
confident,
to that
not
is
confident, don't know.
I'd say not confident because I'm old. I'd be hard for for me to get a job at my age. I read about these people every day. Like, I want to keep working, but they look at me and say no.
Are you confident or not confident you have enough savings for retirement?
Confident.
Can keep up with your expenses?
Confident.
But not by much.
Not by
No, I'm sorry. Be able to pay an unexpected medical expense.
Oh, that's a good one.
Yeah.
Confident.
All right. Buy a home?
Wait, I already have a home.
I know, but if you had to buy another one.
Oh, confident.
All right.
Yeah.
Have enough money to buy a car. Yeah, you just did this.
Yes, I just bought one.
So confident.
Not for me, of course. But
have enough for a vacation. A vacation in the next 12 months.
Just go ahead and say it.
One.
Just go ahead and say it. Just get it out there.
Are you confident you have enough money for several vacations in the next 12
I was waiting for that. Confident. Well, hopeful.
I knew he was
but
confident.
yeah, okay.
No,
Yeah.
he's confident.
I know, I am.
How well do each of the following statements apply to you? Well, not well, or don't know.
I'm
How
not
do you
well,
not
as you know.
know?
I'm not well. So.
Okay.
Okay.
Have you been worrying more about your finances? Is that well or not well?
Wow. Have I been worrying?
You always worry about your...
Yeah. Okay. So you know what to check there. So it's
Yeah,
okay.
not well.
Yeah, not well.
You need multiple jobs to keep up with expenses.
No.
Well, you pay attention to the stock market and stock prices changing. Well or not well? How well does that apply?
Not well.
Oh, good. Yeah. He's lying, but okay. How well does the following statement apply to you? A rise or fall in stock prices would affect my personal finance situation.
No.
Not well.
Not well. No.
All right. Which of the following best describes...
By the way, just to stop for a moment, goes back to where I started this conversation.
What?
There is a wealth effect. We know that people, when the market goes up, they think, I've got more money. I'm in a better place.
Right.
And yet you said it so accurately in the past. Take whatever your balance is and then take 20% off it because that's what the market could do in a very short period of time.
Actually, that should have been the way these were asked. Take whatever you have now and cut it in half. How do you feel?
Well, very few people, and we'll talk about this later, have 100% in equity. So I'd say 20 to 25 would be accurate, though.
Which of the following best describes you and your family's situation when it comes to cost of living? Not concerned.
Refer to the previous vacation question.
Not concerned, not a problem now. It's rising and creating strains. It's rising and creating major strains.
It's rising and creating strains because my daughter's getting ready to go to college. So I keep getting all these reports about how much it's actually going to cost.
Is that
true? So there's a unique experience. No, I'll go with the second one. I'll be moderate.
All right.
Yeah.
Mm-hmm. Compared to your parents' generation, are the following easier, more difficult, or the same? Starting a business.
Wow.
Easier, harder, the same?
I'll say.
Compared to your parents' generation.
Yeah. Wow. That's hard. Wow. I'll say the middle one.
The same.
Yeah, the same.
Finding a job that makes the most of your skills and interests.
Oh, I think that's easier today than it was then.
Being a full-time parent rather than work outside the home.
Well, I can't make that judgment because I've never done it.
No, you just how you feel. How do you feel about today's world versus... Geez.
Oh, I think it's harder today.
Okay, that's a reasonable answer. Yeah. Don't overthink this stuff. You're like some of our listeners. You're overthinking.
Okay. Yeah.
Buying a home, easier, the same, or harder?
Oh, harder for sure.
Really?
Oh, I think so. To buy a house today than it was in my parents' generation? Yes. I think
but you can get a 50-year mortgage now or soon with no down.
Nothing down.
It's easy.
50 years.
You won't be able to keep it, but it's easy to get it.
You got 6 months, sure.
Finding the right person to marry. You can't do it again. You've already done twice. You're done.
I've used up the choices.
Easier, the same, or harder?
For me, I'd say way harder.
Well, yeah, you way harder, but
way harder.
Okay. I think that counts. Caring for a sick or aging relative, easier, the same, harder?
Than my parents' generation?
Yeah.
Oh, there I'll say the same.
All right.
Yeah, that's hard to judge.
All right, here we go. How would you rate the strength of the U.S. economy? Excellent, good, not so good, poor, don't know.
Good.
Good.
Yeah.
Now we're going to give you you are comfortable.
Yeah.
Comfortable. Now, here's
most
going
people
forward.
feel comfortable. I read the results. Most do. Yeah.
Most people feel comfortable. They're in those...
But not by that much.
No. Well, comfortable,
62% it said feel comfortable, which
Yeah.
would be a landslide in a political election.
Right. I think that's pretty high. With the way things now, this is your life tomorrow.
Okay.
Okay?
Yeah.
With the way things are in America, do people like you and your family have a good chance of improving your standard of living?
Improving
Agree,
it?
somewhat agree, neither agree nor disagree, somewhat
I'll say
disagree.
somewhat agree.
Somewhat
Yeah.
agree.
I'm a middle child. I'm going to be
Generally
right down the middle.
speaking, how optimistic are you about your personal future? Very, somewhat, neither, somewhat pessimistic,
I'll say
very pessimistic.
if I'm honest, yeah.
Okay. And how about, do you think the American dream, that if you work hard, you'll get ahead, still holds true? Still
Somewhat
holds true,
agree.
never held true,
Oh,
once held true, but not anymore.
the second one.
Never held true?
No. Wasn't it? What was it? What were
Still
the
holds
options?
true?
Yeah.
Never held true, once held true, but not anymore.
Wow. Then I'll have to go with the first one.
Still holds true.
Yeah. I think it's harder, but yes, it's still,
Yeah,
there's still
no,
a possibility.
okay. Over the course of the next year, how do you think the economy will fare? Better, the same, worse?
Wow. I'll say the same.
Do you think life for your children's generation will be better than it has been to you?
No.
All right. Now, these are all confident or not confident. Thinking about your finances and the prospects of today's children. How confident are you their generation will be able to find a good job? Confident, not confident.
Wow. So much of that's changed in the last 6 months with AI.
I know. but
That's
see,
really hard to-
You got to answer that based on how you feel at the moment you're taking this poll.
I'm going to have to say not confident.
All right.
Hate saying
Have
it.
enough savings for retirement. It's for your children. Confident or not confident?
Well, because I know.
Well, you're
couple
talking
of them
about,
have been
let's talk about the
savers.
world's children, not
Oh,
yours.
then I'll
the
say
world's children.
not confident.
Keeping up with their expenses.
I'm going to have to say not confident.
Pay an unexpected medical expense.
Not confident.
Buy a home.
Not confident.
Have enough money to buy a car.
I'll go with confident on that one.
I did the same. I did exactly the same.
That's kinda
Receive a
scary.
college education.
Not confident. It's just too
Afford
expensive.
to have children on their own.
Wow.
I know that's a big question.
And that's bad for the future of all of us. But I'm going to have to say
That's a-
not confident because it's just so expensive.
Oh, now, how do you think you fared on this?
Oh, I think I'm pessimistic on this.
Yeah.
Yeah.
You ended up in. You said you thought you'd be a confident optimist when we started,
Yeah.
but it came out that you are a confident pessimist.
But 77% of people surveyed are pessimists.
Right.
Yeah.
And so what's interesting is that according to the poll, the national poll, the majority of us are comfortably pessimistic.
Yeah.
Like Tom and me.
Yep. Yeah.
We're okay with now, but we worry about tomorrow. And
Well-
what's fascinating is that the number of pessimists together way outweigh the optimists.
Now, I think we need to be honest with ourselves, too, and because this is something you spend more time talking about than I do. We have no idea what tomorrow brings, next week could look like, the future holds. We just don't know. So, and I'm
But it's
kind of a
interesting
worrier.
how gloomy
You know
we
that.
are.
Yeah, but I'm kind of a worrier by nature. Like, it's just going to, I mean, you know that. So I'm probably a pessimist for that reason because I'm built that way a little bit. I'm optimistic. I've taken a lot of risks in my life, right, with money as an entrepreneur. But I think all of us need to work hard to be patient, make long-term decisions, and not get caught up in what's happening today because today could all be very different by tomorrow.
That's true. That's true. I just thought this was really interesting, though, to see how many of us are pessimistic right now. 77%.
Yeah, it's almost 8 out of 10. Yeah. About the future. About the future. About
you
the
were
future.
comfortable currently.
Correct. Yeah. Well,
But
you know what? And what can we do about it? Not that much. Some things, but not that much, really.
No, we don't really, as individuals, we don't have a lot of control other than trying to put ourselves in a position to be as comfortable as we can be in the future, but we really don't have a big impact on our children or our grandchildren's future. We just have to maybe try to make decisions today for the world when we get to be involved in those decisions, like by voting, that affect the potential for the future.
And we have tried and continue to try to educate all generations about saving and investing and the future. So I think that we're doing our little piece.
There is a reason. See, right there, there's a reason to be optimistic.
Yeah, there is. But when you take each one of those things and you pull it apart, there's a lot of headwinds. It kind of scares me. So
now we take questions. You guys send them in to us at talkingrealmoney.com on the contact form. These are the ones you typed. How big's your pile today, Tom?
Oh, it's lengthy.
Yeah.
Like the people who are mad at me. So
is it in a 3-ring binder now?
No, but
okay.
I appreciate all the questions. I know we're in the holidays here, so keep them coming. I know you're going to be busy, putting the tree up or whatever it is, your traditions, but please keep asking us questions because we're still here. In fact, we'll be doing a show. We'll be doing a show for all the time.
We're going to do a show the Saturday after Christmas.
Yep. Yeah. So, all right. This comes from Mark in New Prague, Minnesota. Love the upper Midwest. Currently 61 years old.
You just aged him 2 years.
I know, he's going to hate me. Would like to retire in about a year. Probably have one of the more strange diversification plans, but curious about your recommendation for changing going forward for me in retirement. I'm changing my IRAs. The current mutual fund I'm in has a high expense ratio. And then he adds, but actually has a good return at 12%. Now, that would not be a reason to own the mutual fund that you're in, looking at the recent return, because there could be a lot of reasons why it's good or bad for that matter.
And one of those is luck.
Yeah, total. So you really want to make sure you have the right asset classes. You really want to make sure you have the right expense ratio. So then he goes through the all the balances. He has $1.2 million in a SEP IRA, $35,000 in a Roth. His wife's got a $42,000 IRA, $82,000 in cash, and $600,000 in high yield checking. So by my read, when I kind of added it up, he's about 2/3 in stocks, 1/3 in cash, of either the cash variety or the high yield checking.
And bumping right up against $2 million in assets.
Total, yeah, correct. Ideally, I will not be drawing Social Security until age 65. I'll be getting $3,200 a month and a small pension of about $325 a month. I think the ability to live on cash and withdraw yearly out of the IRA should give me the ability to pay relatively low taxes, maybe even near zero, which would also keep my healthcare premiums low until I hit 65. I will have ongoing healthcare costs for my wife as she is only 54. Your thoughts on redoing my diversification? Well, the problem here is...
Do you have stuff to see? I don't see anything.
No, he does. It just tell us you have $1.2 million in your SEP IRA means nothing other than hopefully that's all in stocks because I assumed it was, which is
no, don't assume it's all in stocks.
I know. So, but back to the situation because here's the way I'm reading this question. Thank you, Mark, for it. Is how much risk should you be taking if the guaranteed income you're going to get from Social Security and a pension appears to pay all the bills?
That is such an interesting question because the answer is actually the opposite of what you'd think it would be.
Please.
Here's the answer. You don't need to take much risk.
Thank you for that.
That's why we call it a risk profile. It's tolerance for and need to take risk. The fact of the matter is, risk is not just about how much money you're going to be making in the future. It's about how you're going to feel and how you're going to behave and how you're going to react. And if you had that entire $1.2 million going into retirement in equities, well, the depending on you and your tolerance, which factors into the formula, you might panic just when the market is at its worst, because that's when all the headlines start saying, oh my gosh, it's just going to get worse from here. It's been this bad. If it's been this bad, it's going to get worse. It always happens. You know, the magazines back in the past had bread lines on the cover during the crash of 01 and 2008.
They did.
So the implication is, dude, you're going to be 20 years before you recover, and people start going, oh, I better get out now, even if it is at a big loss. So that's really the determinant, not how much income you have.
Yeah, and there's another part to this. His wife's a little bit younger, so that's something to consider. Part two is he didn't really talk about the planning part. Do you have a plan that says, here's how much risk I need to take? What do I need to make on my money to make sure I'm going to sustain myself? Which, maybe, as you said, doesn't sound like much.
But I did see one glaring thing that bothers me about his portfolio.
What's that?
Big, glaring thing.
Yeah.
$600,000 in high-yield savings.
So you'd rather see that in a bond fund of some kind?
I'd rather see it in a bond fund. I'd rather see it in a CD ladder and high-yield savings. I'd like to have 12 to 24 months of expenses in high-yield savings.
That's it. Don't use it as a long. And by the way, what is
that?
We haven't
because
looked in
you
a while.
want to lock yields in case rates fall.
We haven't looked in a while. The high yields are still paying somewhere in the 4s, I imagine, something like that. I'm just guessing.
You're right. I have not looked.
We haven't had that question in a while. The way we used to get it basically every single day. So yeah, and maybe you mix that a little bit, as you said. You could have a CD ladder, you could have some bonds in there, and maybe the high yield is part of it. But for the shorter term.
Look at good old Everbank.
Hanging
in
now?
there.
Still over 4.
And Genius Bank hanging in there, 4.05.
Okay. There you go. So you're still making 4%. So, but I think that's a weakness. I would also, before we could really have any judgment about your portfolio, have to know how that $1.2 million in your SEP is invested. The Roth it's a small Roth, $35,000. That should be 100% in stock. So
that could be all in stocks because that's really long-term money. Yeah.
Thank you for listening. Thank you for your question. John writes us from Satellite Beach, Florida.
Oh, that's an hour away from my little house here.
Okay. Still circling the globe, apparently. I'd like to address your issue of the 100% stock portfolio and age. I'm 47 with several million in stock-only investments and planning to retire next year off of real estate and other assets. I have 20 years until I even touch retirement funds, 401k, etc. Your advice seems aimed at people approaching retirement and doesn't cover younger individuals. If you're in the accumulation phase, why would you not recommend 100% in stocks? Not everyone gets spooked by downturns and can have a long game mentality. Why not shoot for the maximum returns?
Because, again, we're generalizing. We are talking to hundreds of thousands of people. And you just said it. Some people are very comfortable with extreme volatility.
Okay, I'm going to argue with you that very few people can take 50%
I was just going
to
amend that to very few because we know that
we've
anecdotally
seen it.
From multiple surveys we've done of our listeners and our audience, and we have rarely seen an audience that will raise a hand. Yes, I am comfortable losing 50% of my money over 1 year.
We got to ask at Retire Meet next year again. We didn't do it last year.
Yeah.
I'd love to ask that question.
It's usually one or two hands out of 400 hands.
Yeah, not many. And by the way, here's another thing to consider. We believe in diversification, right?
Last I checked, yes.
And bonds are
Let's
a
see,
diversifier.
it's on the checklist. Yes, there it is.
Diversifier from stocks. They are a different type of security. So oftentimes I tell people, you might make a little bit less, but...
No, you will make a little bit less.
True. But
you will over time make less. You always have.
But so diversification, it's a different type of security.
And
that's my
take. See, and that his question goes back to the previous question. It dovetails perfectly with that. It's not about taking all the risk you can take because, as you've said multiple times, you're not going to beat Jeff Bezos or Elon Musk. You're just not. So it's not about who can accumulate the most assets. If you have millions of dollars and you're comfortable, why would you want to put yourself through a 50% market decline potentially? Maybe more. We don't know.
Run home and read 1929, see if you feel better. John writes us from Boulder, Colorado, which I'm loving, by the way.
Wow, near me and then my hometown. I know.
You're right there. Retired and looking to do automatic withdrawals. Do they have your statue up there yet in Red Square?
Oh, dude, wait. Hold on. Before you get into the question. They will soon because
eventually.
Because my latest short story on my New Tales Told podcast
Yes.
is called Safety Matches, and it's based on a true story of me playing with matches at 6 years old in Boulder, Colorado.
You started the conflagration of 1879?
I don't want to spoil the story, but maybe a little.
Okay. It's a lot to take on, but I respect for the fact that you're standing up. John, again from Boulder.
I was forced to.
You're forced to start a fire. Okay, I really got to listen to this podcast.
No, I was forced to step up at the end
I see.
there. So.
Okay. He says, retired and looking to do automatic withdrawals from our IRAs to fund living expenses. All of our investments are in index exchange-traded funds. You know where we're headed with this one. We've learned that you may not set up automatic withdrawals every month from accounts that hold ETFs, only mutual funds. So in retirement, should we switch from ETFs to mutual funds? FYI, Vanguard, Fidelity, and Schwab all have this policy.
Yeah. No, because they're ETFs. They have to be sold, and they have to be sold by you. You have to be the one doing the selling.
Exactly.
But there's an easy way around this. Why mess with it at the beginning of the year, or if you prefer, the beginning of the quarter? If you don't mind a lot more work, the beginning of the month.
No,
put money
twice
into
a year.
your
Twice a year.
Yeah, I say
Plenty.
once. It's easier at the beginning of each year because then it gives you a budget for the year. Say, okay, in 2026, I am going to need $50,000 to live on. Then you go to your brokerage firm and you rebalance your portfolio, and you take, if you have enough from that, then you use that for the cash in a high yield savings account, and you spend that down for the rest of the year. That's all there is to it. And then you sell a little more if you need extra money.
So it is more complex. It is not as you said,
complex.
No, but it is harder to buy and sell ETFs due to the nature, the fact that they're trading all the time, the fact that it's just harder. But you said it. Just do it once or twice a year. You don't have to do this that often.
I mean, okay, if you can find the exact same mutual fund,
which many times you now can, not always, but you know, so
then
you can't buy the ARC fund as a mutual fund.
But here's the thing.
Kidding. Don't buy the ARC fund.
For that slight effort advantage that you're going to gain, you're going to pay more in expenses. So there's a cost associated with that. Almost always the mutual fund is more expensive than the ETF.
I think people have a tendency to believe in retirement that they should sell securities on a regular basis to finance their living expenses. I think that's overrated. I got to be in the market right up to the time. Yeah, okay.
No,
maybe.
you actually probably shouldn't.
Yeah,
because then you have a high comfort level that you're covered for the next year, even if the market does crazy dances.
Which crazy dances might be just around the corner, considering how normal everything's been. That's it for the questions today, my friends. You can send us more easily. Go to talkingrealmoney.com, click on Contact Us.
And if you want to actually talk with us with your mouth to our ear and the other way, which sounds just gross, but I'm not putting my mouth on your ear, Tom.
Thank you.
I'm not
really
doing
appreciate
it.
the fact that you're not going to.
I'm not
been friends a long time, but it ain't going to happen.
I've never put my mouth anywhere near your ear.
That's true.
In your headphones.
I'm glad we have 3,500 miles between us here, so I feel much better.
What was I going to say? Oh, call us on our Saturday show, our radio show. 855-935-TALK. Between 3 and 5 Eastern Time, or for those people on the West Coast, both of you, between noon and 2 Pacific. No, there's more of you. I'm kidding.
A lot of you on the West Coast, so we'd love to hear from you.
Do you want to add anything before I give the magic 3 words?
This is the time of year to get started for next year, right? To have a plan in place, so call us if you want to do that.
Pretty much, isn't it always the time of year to get a plan in place?
We know people have a tendency, and I'm doing the same thing because I just got rid of 2 subscriptions. Yay, me. Cleaning up your finances before the end of the year or into the new year. People traditionally do that because it's like, it's a time to get it done.
And just if you want to know anything, do anything, talk to an advisor, whatever you want to do, go to talkingrealmoney.com. Talkingrealmoney.com, because that's the place where all the stuff that we do on this show goes. And this show, what's it called again? Talking Real Money.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.